All right, hello everybody. Let's take a look at the S&P. Now, the SPY is the ETF that tracks the S&P 500. And if we go and we check out the fact sheet, every ETF has a fact sheet. We can look at the holdings, and what we're going to do now is look at the sectors. So sometimes if you know what's going on in the sectors, it can give you insight into what's going to go on in the broader market. And then when you go into the sectors, if you see what stocks are moving and what industries are moving, then it can give you insight into what the sector is going to do. So technology is the biggest sector, 32.4%. We're going to look at XLK, which is the ETF that tracks that particular sector. And as we can see, it's kind of, down a little bit today, not really doing much. Not in the driver's seat. It's been going sideways for a couple of weeks now. Notice here how we found support at the level that had been resistance. This is a very common thing in markets. It happens because of seller's remorse, believe it or not. People sell, and at first the price goes down and they think, oh, they made a good decision. But when the price goes higher, a lot of them say, I made a mistake and I'm going to buy my shares back here. So very common thing to see. You can even see it back here, right? Resistance here became support over here. Another way of seller's remorse can be seen on the charts is when we find support at a level that was support before. There's people who sold here, and soon after the stock or the shares blasted off, and they say, if it ever gets back down to my price, I'm going to buy my shares back. So you get remorseful sellers from here, placing buy orders here. It makes the level that was support become support again. Up here, you get remorseful sellers from here, placing buy orders over there. It can turn resistance into support. But anyway, that sector is not really in the leadership role right now. Let's go look at healthcare. Yeah, I mean, healthcare looks pretty weak here. Again, here's another example. What was resistance became support. Healthcare is 11.1% of the market. It used to be much higher. But anyway, when support breaks, meaning that the price goes below it, it tells us that the people that created the support with their buy orders are out of the way now. So they finished maybe or they canceled. So when the sellers come into the market, they got to be really aggressive. They got to be willing to really push the price lower to get buyers interested. That's what's going on over there. Let's go look at our financial sector, which is kind of going sideways here too. Really not much to see there. Next up would be, let's see, consumer discretionary. The ETF tracks that sector is XLY. Yeah, now this is kind of interesting. So this has really been where a lot of the strength of the markets come from over the last 4 or 5 days here. Now, if we look at this sector, just like we can look at, just so we can get insight from the sectors of what the S&P is going to do, we can get insight into what the sectors are going to do by looking at what the companies in the sector are doing. Now, this sector is interesting because it is dominated by two stocks. Amazon is 22%, Tesla is 15%. So let's just take a quick look at those guys. And this is a good way to come up with trading ideas. If you see a sector that's breaking out or breaking down, you can look within the sector for ideas. Like I would be looking in healthcare right now for short ideas. All right, Amazon not really doing much. And Tesla, yeah. So there's our. Now I would be watching this here for a potential reversal. All right. So Tesla potential reversal. Another way we can see this remorse in the market is buyer's remorse, right? The market gets to a peak and people buy, and right after it falls down, and they say, if it ever gets back to my price, I'm going to sell and get out at break even. So when we finally get back up there, you get remorseful buyers from here placing sell orders over here. And then the same thing happens over here, and it's happening now. Now, a lot of times, as you can see, we sell off when we get to resistance. That's because some of the sellers get concerned that they're going to miss out. They know the buyers are going to go to whoever is willing to um who's willing to sell at the lowest price. So some of the nervous sellers, they start to undercut each other, and you get this snowball effect. So I definitely have Tesla on the radar screen here for a potential reversal. All right, next up would be communication services. That is symbol XLC. Now this one has been pretty strong here as well. This is also a sector that's dominated by a couple stocks. You can see here that Facebook is 20% and Google is almost 20%. So these two guys are really kind of in control of the sector here. I guess we could just take a quick look at that. All right, that's Facebook. This is Google. All right, I don't really see much going on these guys. All right, next up, we're going to look at industrials. XLI is the symbol there. So I kind of rolling over a little bit. Consumer staples is next. Now, consumer staples is a pretty small sector, but sometimes money flows into it right before the market starts to break down. It's your classic flight to safety. But I don't really see much going on here. Oh, wait, sorry. Energy, utilities, real estate. Big move down in oil today. XLE is energy. Yeah, you see, here's another example of what might happen with Tesla, right? We got to a former resistance level. Then remember, resistance is a large group of sellers. Sometimes some of the sellers start to get nervous that they're going to miss out. So they start to undercut each other, right? And this is one of the ways we find trading ideas. When something gets to resistance and it looks like it's rolling over, or gets to support and looks like it's rallying, well, therein lies potential profits. Utilities, real estate, and materials. So I'll look at materials first. These guys are really small. They don't really affect the broader market, but we could still look at them for trading ideas. For example, look at this here, right? Here's another example of finding support at a level that had been resistance. So this is kind of the opposite thing now. See how, I mean, look at that. We got to resistance within pennies of prior resistance. Now, this is the opposite. Sometimes the people that want to buy start to get nervous because they know the sellers are going to go to whoever is willing to pay the highest price. So they start to outbid each other and you get a bidding war, which pushes the price higher. So a lot of times when you get to support, you rally. You can even see that down here. Right? I mean, it's not a coincidence that this is where the market found a bottom. It found a bottom here because it was a bottom over there. Utilities, not too much going on there. But again, right, resistance at a former resistance level. And then last but not least, real estate. Same thing, right? Found resistance at a level that was resistance before. So I guess the most important thing to watch now is just Tesla. Because if this reverses, that's going to bring down the consumer discretionary sector. And that in turn could bring down the broader market. All right. All right, everyone. Thank you so much. I will see you soon.